Hello and welcome to Samvat 2079 Mutual Fund Cafe. We are live here from India's biggest stock exchange, the National Stock Exchange. Now, Samvat 2078 was a bit of a mixed bag. We're ending the year absolutely flat, but that tells you half the story. It was a year of two halves, where in the first half we saw a lot of despondency, but in the second half there was a very sharp recovery as well. And within that, what was clear was that the domestic economy facing stocks, whether it was the banks, whether it was autos, whether it was FMCG, they did well, and export-oriented companies, especially IT, saw quite a bit of decline. So how's Samvat 2079 going to pan out? To discuss that, I got with me the who's who of the mutual fund industry. Got Nilesh Shah, MD and CEO of Kotak Mahindra AMC. We have S. Naren, who is of course the CIO of ICICI Prudential AMC. And we also have Mahesh Patil, CIO of Aditya Birla Sun Life AMC. Gentlemen, thanks a lot for joining us. First of all, to all of you, a very happy Diwali, and I hope that Samvat 2079 is full of health, wealth and prosperity for all of you.
Thank you, Anuj Bhai. Wish CNBC-TV18 viewers also a very happy Diwali.
So, Nilesh Bhai, let me start with you. How are you feeling at the start of this Samvat? We had so much happening in the last Samvat. It looked like markets had so many highs, so many lows, but at the end of the year, we are absolutely flat. At least for the Nifty and the sensex, we are going home with just about 1 or 2% cut. As we start this new Samvat, there's a lot of optimism, there's a lot of hope, there's a lot of talk about decoupling. How are you feeling now?
So one, we are cautiously optimistic. We believe next year will be just like a Diwali day, lots of celebrations, and in between there will be loud burst. The Russia-Ukraine situation, the Fed rates trajectory, the global inflation problem, and such kind of topics will continue to impact our market. Our markets and our economy are part of global economy, so we won't get decoupled, but certainly we will be impacted less compared to what others are. One advantage as well as challenge for us is that we are trading, while at our historical average valuation, we are at a significant premium to our peer group. So we need money which is coming not with a 1-year horizon, but with a 5-year horizon. On a 1-year horizon, we are the reasonably expensive emerging market. On a 5-year horizon, we are the cheapest emerging market. So there will be tussle between events happening versus our fundamentals, short-term valuation versus long-term valuation, and eventually we'll have celebrations.
Okay, eventually we'll have celebrations. That's the good news, right? Now, Naren, your community and in fact the entire domestic investor community has really kept this market afloat. There's been so much FIS selling, but everything has been absorbed, right? Our market is closer to all-time highs, while some of the other markets, developed markets like US, are so much down very close to 52-week lows. Some markets like Kospi and Japanese market actually are at multi-year lows. So how are you seeing this market? Is this demography at play, and is this going to remain like this for foreseeable future?
I mean, it's tough to say. I think, somewhere Indian investors go through cycles. In the 33 years that I've worked, there has been a period of time when people have been very positive on equities. Then there have been periods of time when they have been very positive on real estate. So now they are again going through a period where they are reasonably positive on equities. So when they go through that period, clearly it appears that, the domestic investors are very positive on equities. Having said that, frankly, what we are telling people is be positive on debt as well, because end of the day, debt also is going to give you much better returns than what they were giving earlier. So, for a long period of time, we've been telling people focus on asset allocation. I mean, asset allocation does include debt, but then there is a recent study by RBI which says that debt mutual funds have hardly been invested by retail investors. So we tell people invest in debt also, not just in equities. But in the last post-2020 particularly, there has been a lot of interest in equities, and due to that, we have had this situation. Also, I think the credit is due to the government for the good macro management in 2020. In 2020, many of the central banks in the world and many of the governments actually overdid the stimulus bit and overdid the money printing bit also. That has resulted in huge inflation in many of the developed world, and now they are forced to over tighten, and actually due to that we have had this problem across the world. India didn't overdo that bit in 2020, and that is the benefit we have seen in the last 1 year. And that we should remember that was actually due to policy mistakes committed by many of the developed markets in 2020. So I believe that we are in a phase where debt is also going to be an interesting asset class, aside from asset allocation and equity. And that should not be forgotten by investors, because the period between 2008 and 2021 was led by money printing by the global central banks. When they kept on printed money, debt was a boring asset class because they were there to print, but they are no longer there to print. So that is going to add to one more asset class that the mutual funds can look at.
Obviously, so that's the big call, that look at debt as well and asset allocation, of course. Mahesh, what's your big call for the year? As we start the new year, what would be your big call?
So I would say that, India in this period has been able to really show to the world that, we have arrived in a sense, right? We have seen, despite the global macro instability, our overall, not only the markets, but even our growth, if you look at interest rate, inflation, has really behaved in a much normal manner. And again, I would agree with Naren. I think over the years, what this government has done, I mean, the true benefit of reforms, which started around 7 years back, I think we are seeing that benefit of that now coming through. Unfortunately, we are in a period where there is going to be a slowdown, high interest rates, lower liquidity, and that would take away some of the stink in terms of the revival, what we have seen in the economy. But I think the domestic growth, even in this year, if you look at not only GDP growth, but the corporate, I think, balance sheets and the corporate growth has been very strong. So during the last COVID period, we have seen many Indian corporates have been able to actually improve their productivity, efficiency gains, and some of them are sustained. So actually we have seen the overall return on capital and ROE of Indian companies has gone up significantly. I mean, pre-COVID, that number was around 13-14%, which has gone to around 16-17%. So I think in that context, I think in this kind of a difficult year, if we're able to do that, then I think we should see when things normalize, and they will probably 6 months down the line, then I think it's going to be India's really story which will play out. And there are enough structural drivers in place, be it the discretionary consumption, which I think India economy is at an inflection point where the per capita GDP is now crossing around 2,700. Beyond $3,000, we see a lot of discretionary consumption items starts to move up. The China plus one, and now what's happening in Europe, I think domestic manufacturing is seeing a big boost. And despite global growth slowing down, we're actually seeing some of the companies doing better on exports. And that is going to be a more structural long-term theme. So I would say that domestic growth, domestic manufacturing, long-term India demographic discretionary consumption, I think that is going to be the theme really which will take India not only for the next 2 years, 3 years, for the next decade or so.
Got it. Now, Naren, the one big call that you had made, and that really stood out for me was about 6 months back when you said that commodity producers rally is overdone, and now it's time to look at commodity consumers. Is that still on, or do you think that's now almost coming to an end?
It is still on, because finally at the end of the day, unless China is going to send a big stimulus to the economy, and I don't think they're ever going to stimulate the economy on the scale what they did in 2010, 11, 12. You're not going to see a big global commodity rally. Of course, when China abandons zero COVID and goes back to a normal environment, you're going to have one relief rally in commodities. But you're never going to have the kind of rallies like what we saw in 2020-21 back in commodities. That is a one-time rally. It doesn't mean that again people think there is only one way, either go down or go up. We can have a situation where the down phase is over and we start oscillating at these price points, and we can have, we have had a good correction. If you look at where commodities was 6 months back in many commodities and where it is today, I mean, possibly with the exception of oil, most of the other commodities have crashed substantially, and they need not go down further. But to go back to where they were, I doubt whether they can go back to where they were 6 months back or 9 months back. I doubt it very much. But will they keep on going down from where they are today? I don't think so. In fact, when zero COVID ends, there will be a relief rally across commodities. And after that, maybe again settle back to where they are today. And that's how we see things at this point of time. Because China is a big driver. And the fact that China had a zero COVID policy was also responsible for this entire drop in commodity prices. And that is not something we understand. Somehow we don't realize the impact of the zero COVID policies of China.
Got it. Now, just on that, Nilesh, to you as well, I remember you made this big call on autos. You said maybe we are a bit early, but there's just too much value to ignore the auto stocks. That's played out really well all through this year. More juice left here as well?
So auto sector to a great extent will be influenced by what kind of policy comes. Will government support electric vehicle? Will they support hybrid? Will they discourage ICE? So to some extent there is a variable of government policy influencing auto sector. The second thing, Anuj bhai, what we are seeing is that the economic recovery is not as strong at the bottom of the pyramid as it is at the top of the pyramid. So for a luxury car, you will have to wait for 6 to 12 months to get a delivery. Whereas for a bottom end entry car or a two-wheeler, there is easy availability. Now we have to really wait this Diwali season. Does the demand come back? Does the volume pick up? Our feeling is that subject to those two variables, it is still time to look at automobile sector and auto component sector. Rupee depreciation will definitely help to some extent on the export side, while they do have input cost which is imported, but still there will be some benefit. And hopefully this economic recovery is now reaching bottom of the pyramid. The consumption will become positive, volumes will pick up. Chip shortages are now reasonably well behind us. So yes, you can be cautiously optimistic on automobile sector, but watch out for government regulations.
So I can get my car faster than gentlemen sitting on that side. That's what Nilesh is saying. I need to take a break. We'll come back and discuss some more topics. Stay tuned with CNBC-TV18. Welcome back to Samvat 2079 MF Cafe live straight from the NSE. Now, one thing which is clear is that the fund managers are still extremely bullish on the domestic theme. But one sector which took a big knock this year was IT, and that has not really seen a recovery. Mahesh, I wanted your thoughts on this. Are you now selectively buying as a portfolio manager into the IT space?
Yeah, so the IT sector has, I mean, just like all the global stocks, we have seen a derating. IT sector has also seen a derating. I think there were two concerns which were there in the IT sector. One was because of the global slowdown, whether you will see growth rate, which had actually inched up to around the mid-teens, going back to around high single digits, and margin pressures, right, because of the increase in the labor cost. I think while there could be a slowdown because of US recession, but I think we don't see the growth actually going down, say, below 8 to 9% next year. And because the spend is more towards digital, it's at the front end. And a lot of corporates are still behind the curve and they need to invest over there. So that should not get impacted as what had happened in the earlier down cycles. And the pressure on margin which was there because of higher wage costs. And that is easing at the margin. And we saw that in this quarterly numbers. Actually, some of the IT companies surprised on the margin front. So I think with that headwind behind and with valuations now, okay, still slightly above the historical average. But I think given the current uncertainty, I think IT sector would still provide stability to the portfolio because I think earnings growth will still be there. A lot of these companies are generating good cash flows. So the cash flow yield is anywhere around 3 to 5%. And that should provide good support. So it becomes a good defensive in this market to really hold on with a kind of a steady return.
Okay. Naren, I think you had made this point, right? That it was not for Indian IT, maybe, India would have been Sri Lanka or Bangladesh. So, no, but how are you approaching this space now?
I think it's a great sector with a long-term view. I think India has done a phenomenal job there. And I think it's a sector where you should do systematic investing. Irrespective of what happens to the US economy, I think if you do systematic investing in the sector, you're likely to make money. People keep saying China is the headquarters of manufacturing, India has been the headquarters of services. And you can see that every entity in the world has set up services base in India. And there is no escaping that the best source of educated people in the world is India. So I think it's a phenomenal long-term opportunity. If US goes through a recession, it may still correct from here. But it's a phenomenal opportunity to do systematic investing at this point of time over the next 1 year.
Nilesh bhai, what's your view? Because these companies have been great ambassadors for India, right? I mean, over the last many years, they have been phenomenal compounders. Is it just because the run got too excessive post-COVID? Is that also the reason that you've seen this bear market play out? And is this providing an opportunity, or is this still going to remain underperformer for the foreseeable future of, say, next 1 year or so?
So in my opinion, IT is a sector where one should accumulate in this correction. They had run up in anticipation of higher growth, as Mahesh mentioned. And there were some excesses because small caps were trading at a larger premium to large cap. But the basic fundamentals of IT sector remain. The demand may slow down this year, but it will pick up next year as world is moving to digital. And to give you a very small example, in Germany, we saw one minister saying that we can't process more than 100,000 transactions a day. And in India, we shift 10 crore transactions a day to Pradhan Mantri Kisan Samman Yojana. So Germany will have to come to India level someday. And that's the opportunity for Indian IT sector. Governance-wise, the sector is squeaky clean. ROEs are good. They are declaring huge amount of dividend. And many of the companies are doing buyback. So all the stars are aligned for IT sector to deliver performance to shareholders. However, you have to take volatility on stride.
It's interesting you said that, because we are at NSE, and I believe NSE alone handles 15 crore orders per day.
It is the world's largest exchange in terms of volume.
In terms of volumes, and 15 crores, transactions a day. So obviously the IT infrastructure has to really back it up. Okay, we've got just about 2.5 minutes left on the show. Let's get a bit candid. What's been your biggest mistake, and what's been your biggest sort of high point of this Samvat?
Well, both things can be covered in this share. जमाना उसे क्या गिराएगा जिसे ठोकरों ने चलना सिखाया. So ठोकर लगती रही, but हम खड़े होते रहे और चलते रहे.
Which one are you talking about?
मतलब मार्केट में there were ups and downs.
Okay.
You just took it on your stride. And now we have seen so many ups and downs that this doesn't impact much.
Okay. Naren, same question to you. Any one investment or something which really stood out for you this year, or something which you thought that maybe was not a good call?
I like to talk about good calls. As an organization, we popularize balanced advantage
Okay,
as a
so
category.
what to your mind was the highlight?
I think the highlight was, as an organization, we popularize balanced advantage as a category. Today, every AMC in the industry has launched that category. And if you went back 10 years back, I don't think anyone would have known about that category. And today, everyone has got into that category. And that is certainly something that at ICICI Prudential we have felt happy about. Because I think if you look at the lower volatility in equity markets in India, I think part of the reasons is because of popularizing that category. Because it's a category which buys when the markets go down and sell when the markets go up. So I think that's something we've been happy about.
Okay, Mahesh, what's one thing that you felt good about and one thing you're looking forward to?
So I think our call on the domestic economy, especially the banking sector, I think it's an early call which we took, and that's gone its ups and downs. I mean, we saw initially when the Russia-Ukraine crisis, there was a sell-down, but the sector has really come up very well, and I think it looks good, poised to do well. It's a play on the domestic economy, and a lot of things are falling in place for the banking sector in terms of margin improvement, a very benign credit cycle, and corporate balance sheets are now delevered, so they could probably lever and provide credit growth going forward. So I think that was one of the high point, I would say. Also, I think trying to get some investors back into the fixed income. So we came out with the first to come with the target maturity plans, because there was volatility in interest rates. But if you really matched your investment horizon with the maturity, then there were still yields which were there to be taking in the marketplace. And the risk reward with equities this year not doing well, I think getting investors to come into that through the target maturity plans, I think one of the big success for us, I would say.
Okay, I want to end this show with one more line that you had told me, the Bijli line, right? If you can repeat that and then I'll end the show.
So, जमाने को जहाँ पे बिजली गिराने की जिद थी, बंदे को घरौंदा वहीं बनाने की जिद थी.
Okay, so basically where you had a lot of headwinds, which is where you made portfolios and they've done well. Gentlemen, thanks a lot for joining me, and once again to all of you and to your family and your team, a very happy Diwali and a prosperous
Same to all the customers and viewers.
Happy Diwali
to all of you.
Okay, with that, it's a wrap on this edition of Samvat 2079 MF Cafe. Thanks a lot for watching.